Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2 of our Guide to International Equity ETFs, we'll explore tips on selecting ETFs and strategies to boost your portfolio diversification. Ready to make your investment smarter? Let's jump in. Performance and risks of international equity ETFs. International equity ETFs like VXUS can diversify your portfolio, but they come with unique performance patterns and risks. Before diving in, it's smart to understand how these funds have behaved historically and what challenges they might face. Historical performance overview. Over the long term, international equities have delivered solid returns, but they haven't always kept pace with U.S. markets. VXUS, which tracks stocks outside the U.S., has underperformed the S&P 500 in recent years. For example, 2010 to 2020, the S&P 500 returned about 13.6% annually, while VXUS averaged closer to 6.5%. 2021 to 2023, U.S. stocks continued to dominate, with the S&P 500 up around 9% per year, while VXUS stayed flat or declined slightly. Yet, this doesn't mean international stocks are a bad bet. Historically, leadership rotates. In the 1980s and early 2000s, foreign markets beat the U.S. for years. VXUS offers exposure to regions that might surge when America struggles. Currency swings also play a role. When the U.S. dollar weakens, international returns improve because foreign earnings convert into more dollars. A strong dollar, on the other hand, can drag performance down. Common risks and how to mitigate them. International stocks come with extra risks you won't find in domestic ETFs. The good news is, you can manage most of them with smart strategies. Political instability. Governments change, trade wars flare, and regulations shift unexpectedly. Emerging markets are especially vulnerable. Mitigation. Spread your investments across many countries. VXUS covers 46 markets. Avoid concentrating in any single region. Currency fluctuations. Exchange rates can make or break returns. If the dollar strengthens, foreign stocks may lose value when converted back. Mitigation. Some ETFs hedge currency risk, but this adds costs. Long-term investors often ride out the swings, as currencies tend to balance over time. Economic cycles. Different regions grow at different speeds. Europe might stagnate while Asia booms. Mitigation. Pairing VXUS with a U.S. fund like VTI helps smooth out volatility. Rebalance yearly to keep your allocation in check. Higher volatility. International markets, especially emerging ones, tend to swing more than U.S. stocks. Mitigation. Hold international ETFs as part of a diversified portfolio. They work best as a long-term holding, not a short-term trade. The key takeaway. International ETFs like VXUS won't always win, but they reduce your reliance on a single economy. With the right approach, their risks become manageable. How to choose the right international equity ETF. Picking the right international equity ETF isn't just about grabbing the cheapest or most popular fund. You'll want to match your investment goals with a fund's strategy, costs, and holdings. Let's break down the key factors, using VXUS as a benchmark. Evaluating expense ratios and fees. Every dollar you pay in fees is a dollar that could have stayed invested and grown. International ETFs like VXUS are known for low costs, but not all are equal. VXUS charges 0.07% annually, meaning you pay $7 per $10,000 invested each year. Compare this to competitors. Schwab's SCHF costs 0.06%, while iShares IXUS charges 0.09%. Even small differences add up over decades. Why does this matter? A 0.10% fee might seem trivial, but over 30 years, it could cut your final returns by thousands. Actively managed international funds often charge 0.50% or more, hard to justify when index funds deliver similar results. Pro tip: check for hidden costs like trading commissions or foreign tax drag. Some countries withhold dividends. VXUS handles these automatically, but not all funds do. Assessing geographic and sector allocation. Where a fund invests matters as much as what it costs. VXUS spreads your money across developed and emerging markets, but other funds tilt differently. Ask yourself, do you want more or less exposure to certain regions? VXUS leans heavily toward Japan, China, and the UK. If you prefer other markets, like India or Brazil, you might need a complementary ETF. Some funds focus solely on developed Europe or Asia. Others skip emerging markets entirely. How does the sector mix fit your strategy? VXUS has big allocations to financials, consumer cyclicals, and industrials. Tech makes up just 9%, while US funds like VTI hold over 25%. If you're already tech-heavy in your portfolio, VXUS's balance could be a plus. A quick way to compare. Pull up the fund's fact sheet and scan the top countries and sectors. Does it align with your diversification goals? Key takeaway. The best international ETF for you depends on cost efficiency and whether its holdings fill gaps in your existing portfolio. Start with low-fee broad funds like VXUS, then tweak with niche ETFs if needed. Practical steps to invest in international equity ETFs. Now that you understand why international ETFs like VXUS make sense, let's get into the how. From setting up your brokerage account to fine-tuning your portfolio, here's what you need to know. Setting up a brokerage account. Before buying VXUS or any ETF, you'll need a brokerage account. The process is straightforward, but choosing the right platform matters. Here's how to get started. Pick a brokerage. Look for low fees, user-friendly tools, and no account minimums. Popular choices include Fidelity, Charles Schwab, and Vanguard. Open your account. This takes about 10 minutes online. Fund the account. Most brokerages let you transfer money via ACH or wire transfer. Enable dividend reinvestment. Turn on DRIP in your account settings. This automatically buys more shares with your dividends, compounding returns over time. Pro tip. If you're new to investing, stick with brokerages that offer educational resources. Fidelity and Schwab both have free courses on ETF investing. Building a balanced portfolio with VXUS. Once your account is ready, it's time to integrate VXUS into your portfolio. Here's how to do it without overcomplicating things. Start with a core allocation. A common strategy is to dedicate 20 to 40% of your stock portfolio to international ETFs like VXUS. This balances US growth with global diversification. Adjust based on your risk tolerance. Use dollar cost averaging. Instead of investing a lump sum, spread your purchases over time. Rebalance yearly. Markets move, and your original allocation will drift. Want to keep it simple? Pair VXUS with a US total market ETF like VTI and a bond fund like BN. This three-fund portfolio covers nearly every market scenario with minimal effort. Just add money regularly and let compounding work. Ready to take the next step? Open a brokerage account, pick your allocation, and start investing. Even a small position in VXUS can make a big difference over time. The world's markets are waiting. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.